all you wonderful money masters and treasure hunters. Welcome to the May 23rd Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. You'll love this tool. This tool is what I label, you have much to give, so give it to as many as you can. You know, Helen Keller once wrote, I do not simply want to spend my life, I wish to invest it. Now think about that. Think about investing your life versus spending it. So what's the difference, or at least what's the difference that Helen Keller was writing about? Well, I believe it was this. You know, one could spend their life doing a moderate amount of work to obtain a maximum amount of comfort, if that's what one's desire is. And for many, that's really the case. You know that out there. However, Helen Keller, I believe, believed that the greatest happiness in life comes from not the comforts and the pleasures that money can buy, but from the investment of the days of our lives in a purpose that just simply transcends purely personal interest. It's my belief that each of us, that means you, that means me, each of us has a purpose for living beyond our own survival and pleasure. You know, we're like the thread in a beautiful tapestry with a vital contribution to make. Investing our lives requires the commitment of resources, you know, things like our ideas, our love, our talent, our time, our energy, our money, and those things that just simply, you know, are going to support our larger purpose. So here's the question. Here's the question this morning, 9:10 a.m. on May the 23rd out here for you. What is your larger purpose in life? I mean, we all know what one of our purposes are. That's what you're doing right now. But what's your larger purpose? And if you don't know what your larger purpose is, or you don't think maybe that you have a larger purpose, let me ask you this question and answer it. What could your larger purpose be? You know, one of the things, folks, when you struggle to answer a question, out there, oftentimes you just have to change it up just a little bit. What could the answer be? In this case here, what could your larger purpose be? And if you don't know, write something down. You don't have to sit there and dwell upon it. It'll come right to you. What could be your larger purpose? Think of it like this. If you were to be a wise investor of your life, and if that's what you wanted to be, and I think everybody does, then you want to follow the most basic rule that a wise investor would follow. A wise investor never does what? What does a wise investor never do? That's right. A wise investor never puts all their eggs in one basket. For as Mark Twain once said, if you do, you'll have to watch that basket. Is your life invested in only one thing out there? Look, it's as simple as this. I know with certainty that you have much to give. So figure out what that is and give as much as you can. Let's go check out these markets here. Let's go see what they're giving to us right now here. We've got the Dow futures trading off about 129 points or so. We've got the S&P down 16, trading at 1639.50. The NASDAQ futures off 24, trading at 29.77. Russell 2000 down about 9 points. King dollar back 50 ticks. That's mostly, well, it's almost mostly because of the Japanese yen. We'll go take a look at that. Big movements in the Japanese yen here overnight. Big movements in the market over in Japan. I know on CNBC and other places they'll report that it was down 7%. I'll show you that really was down more than that because the Nikkei gapped up or opened up last night. It was really down more like almost 10%, 9 point something. We'll take a look at that stock chart for sure. We've got gold trading up $23 right now, trading out at 13.90. Gold, silver is back 4 ticks, so it's a flat market out there. It's trading at 22.42. Light sweet crude, a little bit lighter this morning. It's off almost 2%, down $1.80, trading at 92.44 out here. Our call-in number, well, you know what it is. It's 877-927-6648. Give us a call. We can take a look at your stock chart or anything that you'd like. So where are we? Because a lot of opinions out there, and certainly I'm going to go ahead and give you mine. I'm going to give you what I consider to be what it is that we know about the market, most certainly from a technical standpoint. And that means that we have to take a look at really all different time frames, because when it comes to investing, whether it's in your life or whether it's your financial resources, you don't want to have all your eggs in one basket. And what that also means, folks, is that you want to make sure that you've got things separated into different time frames. So we're going to take a look at the EKG of the market. We're going to take a look at a 30-minute chart of the S&P futures just to get a pretty good general idea of what's going on right here, right now, what it is that we can expect. If that fails, what that means as well, and what to be able to look for. Then we go take a look at a daily chart. Then we can look at a weekly and a monthly just to give you the overall picture. Because the way in which you manage your long-term capital should be way different than if you were to trade shorter term. That doesn't mean you have to trade on a 30-minute chart for sure, but maybe a daily term. So you want to make sure, you don't have all your eggs in one basket. And we're going to take a look at all those different baskets and all those different time frames. And what do things mean right now? Well, let's start off with the ES Mini, with the EKG, with that 30-minute chart. If you're watching us on TigerTV, that's great. Maybe you're listening in on your mobile device at TFNN.mobi. Maybe it's a radio station. That is wonderful. Remember, you can catch the live stream of this show by going to the homepage of TFNN.com. What a great homepage that is. Over on the right-hand side, up towards the top, you'll see a button with 3 little smartphone devices. Click on that. You'll see the show streaming live. But better yet, go over to the homepage of TFNN.com and sign up for the Tiger's Den. Check out our charts, everybody's charts here in HD. You'll be able to more clearly see things. And, of course, you can always catch the archive of this show on Channel 9. Right now we're looking at the ES Mini. We take a look at some of the different lines that we've got out here. Number one, we can take a look at this rising price channel that takes us all the way back into the low session from about April the 18th. So what are we? We're over 30 days. So it's quite a rising price channel, and that was broken yesterday. It was broken with conviction. Now, what do we know about diagonal and or horizontal support or resistance? When you break those levels, when you break them, especially on a rising price channel like this out here, oftentimes price wants to try to get back inside there. So that's one of the expectations that we should have on a 30-minute chart out here. Does it have to happen? No, nothing ever has to happen, but you want to understand what is the typical patterns, because we all have typical patterns. I can guarantee you that at least 99.999% of you woke up this morning and did the same thing you did yesterday morning. And when you put on your pants, for those of you that did put on your pants, you probably put a certain leg through it that you always have. We all have patterns out here, and the marketplace also has patterns. That's the cool thing. That's the cool thing about what it is that we teach here. Whether it's a Chapman wave, whether it's Fibonacci expansion or retracement, whatever it is, whether it's testing swing points, it's all about patterns out here, and that's what we trade. It's really, we're trading about the same patterns of human emotion as the traders out here. Now, we have different tools. We've got different EKG systems all in front of us, depending on what tools it is that you use in your trading arsenal. So, number one, pay attention to those channels that are out here where price is traveling within. Well, we can see the ES Mini most certainly broke through that. We can take a look at these 4 moving averages. Now, they're over periods of time. So on a 30-minute chart, it's looking back at the last number of candles. The blue line or the green line out here, that's the 200 period. That means 200 candles it's looking at, 200 trading sessions on a 30-minute basis. That's the green line. That is above the blue line. The blue line here is the 50-day out here. The 50, well, not 50-day, 50 period. So it goes back, takes a look at the last 50 candle sessions. Then we've got the red line. That's the 21-day or 21 period. You know, eventually I'll say what I actually mean out there, but you know what I'm really talking about. So it's 21 periods, and then finally we've got that black line on the chart, and that is the shortest term. That is the last 8 periods. Well, the 200's above the 50. That's above the 21, which is above the 8. That, from a momentum standpoint, just says, okay, the momentum is to the downside. Now, what else? We can take a look at coming in at 6 o'clock this morning, 5 o'clock this morning. We can see there was a big push down. In fact, at 2:30 this morning was when that push got to the extreme on that relative strength indicator, gets down to a level of 23.66, below 30. We know when a market does that, it's getting into what? It's getting into a condition of what? Of being oversold out here. And in order to work off an oversold condition, I don't care what time frame it is that you trade on, you can only do it 2 ways. You either work sideways, and you can see that we're right now, the ES Mini is still trading inside the body of that candle. That's all important. That's that candle from 2:30 this morning. The top of that, the open of that candle, 1645.25. Until you clear that, if you do clear that, not you, but if the ES Mini does clear that, what's going to happen? What's the logical outcome that we'll see here if, in fact, the ES Mini does that? That's right. It will go up and it will test and it'll try to get back inside that rising price channel. Maybe successful, maybe not out here. But that's what it's doing on a 30-minute basis. Right now, it just simply has been moving sideways to work that condition off. Can I see a bullish move from here? Absolutely. There's some divergence that is out here in the marketplace that even suggests that that's what the ES Mini wants to do, that it wants to go up and at least it wants to try to get back inside that rising price channel. Where would that be? Well, you can just take a look here at Fibonacci relationships. Go from the high after Uncle Ben came out here at 10:30 yesterday. It was a spike high, got up to 1685.75, down to the low that was put in here this morning at 5 a.m. And just the dead cat bounce, just the 0.382 retracement level, that would take us to where? That would take us right up to 1653. The 1653 get us pretty close to that rising price channel. Absolutely. Is a dead cat bounce normal for anything? It absolutely is. At just the 0.382 retracement. So our expectation should actually be here that the ES Mini, in order to work off this oversold condition, should do the natural thing. It should just do that dead cat bounce and try and get back up in that rising price channel out here. If it can't, boy, that really is telling us about the weakness in the markets. Because on the EKG, while this is breathing, that's what it should do. That is the 30-minute chart. When we get back, we're going to go take a look at the daily chart. We'll go take a look at the weekly chart. And we'll go take a look at the monthly chart for the S&P 500. 877-927-6648. I would say this. Get your shorts out, folks. You want to be wearing your shorts. Be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures are off 122 points right now to the upside. Popping to the upside here, dollar-wise, you've got RUE 21, RUE is the ticker symbol. RUE 21 Inc. is the actual company name. They closed at $34.12. They are trading out at $42 right now. That's the biggest pop to the upside. Apple is the biggest pop to the downside. Dollar-wise, they closed at $4.41, trade at $4.36. Now, let's go back. Let's take a look here. Let's go over, and we're going to switch, instead of the futures contract, we're going to switch over to the S&P 500. So what I've got up on my screen here, I've got the daily chart of the S&P 500. So what do we know by taking a look at this? Number one, we know coming off of the lows here in November, so we're going to come all the way back to the November 16th trading session here. You can see that the market was where? The prior trading session, you can see the market was what? It was oversold. In order to work that off, you're going to go sideways, you're going to move higher, right? Well, we know that what the market has done is certainly moved higher. Now, if you take a look at this candle, if you take a look at this specific candle on November 16th, it's a very important candle. Why? Because that was a key reversal day. A key reversal day requires three things. Number one, it requires intraday for your high and low to exceed the prior candle. Well, in that case, you can see it most certainly did that. That's number one. Number two, it's got to come from an extended condition. A number of different ways to identify extended conditions. You can use different types of expansion. You could just simply use that relative strength or relative weakness indicator. That's what we've got on the bottom portion of my screen. The market was what? It was oversold. That means it's certainly in an extended condition. And number three out there, and finally, the market just simply has to close in the opposite direction. We had all of that on November 16th. I was doing Tom's show on November 16th. I went ahead. We called a reversal out there. Nobody wanted to buy. I got so much hate mail, email of people saying, "How can you actually say the market is going to reverse here?" I wasn't saying anything. What I was telling you, what I was communicating, was what the market was communicating to us. And a key reversal session is something for us to pay attention to. Now, that four-candle session out here, that also, as we've shown before, very significant. Now, let's take a look at yesterday. So what do we have yesterday? Are we in the extended condition? Are we in the oversold territory? The answer is absolutely yes. RSI indicator up around 72.5 on the prior session out there. Did we have a intraday high and low beyond that candle of the prior session? Oh, most certainly we did. And then did we get a close in the opposite direction? Well, we did. So you got a key reversal day. Does that mean that the market's going to move lower? No. Does it mean that down here November 16th that the market had to move higher? No. But is it something that you pay attention to? Oh, my goodness, of course it does. So we've got a key reversal day. Also happens to be a bearish engulfing candle. Of course, that was easy to do if you take a look at the last 2 days' candles out there prior, just small-bodied candles out here. Now, what else do we know on the daily chart? On the daily chart, what we know is that price got down to that 1650 level. Close at 1655. We're going to gap down below that this morning at the open. Is that important? Yes, because that's one of those great primary trading ranges brought to us by the great educator, Bud Rolfs out there. In this case here, the S&P seems to move in increments of about 100 points, travels with inside those areas. Once it gets above that area should go on to the next spot, or at least the midpoint level. That's really what the Dow, in fact, was doing out there on a monthly chart. Now, the daily chart, let's just stay with the S&P 500. You get back below a primary trading range, it means you've rejected that upper level. And just like riding any kind of elevator out there, that says you can go back down to the bottom of the next one. That would be 1550. I suspect that is what we're going to see at a minimum of where the S&P is going to travel to. We're going to see it get back below 1650. If it closes below 1650 today, that's going to be another great indicator as to where the market is going to head to. At least the midpoint level, which is going to be 1600, but more likely it'll just go back and it'll test that 1550 level. That's 100 points down. Now, sell in May. You've heard about that sell in May. It doesn't necessarily mean that you have to sell on April 30th. Many times it works that way. But sell in May, folks, what it's really referring to is a 6-month cycle out here. The market can be broken down into 2 6-month cycles. So it doesn't have to start in May. It doesn't have to start on May 1st. It just know that during that 6-month unfavorable cycle, that's the cycle that we're in, you should see a correction, a retracement. If you go back and you take a look at the last 10 years, in fact, I'm going to go ahead and do a special report for you. I haven't started it yet, but I'll do a special report because I think that you should all really have the information. You should all know that. So I'll put together a special report with charts and so forth, and I'll have it done in the next week or two out here. But right now, we know that we're in that cycle. We got a key reversal day. The market should retrace. Look, if we just take a look at Fibonacci retracements from that November 16th low all the way up to the high that was put in, just so happens, folks, the dead cat bounce takes you to 1555, and we just said 1550 is likely the next target. That's a simple one. That's an easy one. But will it go lower? 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 85 points, trading down at 15,222. S&P off 17, trading at 1638. Composite down 31 points out at 34.32. Russell 2000 leading the charge on the way down. Neck and neck with the S&P here. You've got the Russell 2000 trading at 972 off another 10 points here this morning. Google down 9, Apple down 2, Microsoft off 21 ticks, Intel up a penny, Cisco off 5, Rue 21, the leader in the clubhouse, up $7.8 right now. Lender Processing, LPS up 357. Dover Corp. I could go for some Dover Soul. That's up 3% here this morning, up 255. HPQ up 197 right now. To the downside, Google leading the charge off $8. Ralph Lauren, oh my goodness, getting shellacked. They were out with numbers here. RL is a ticker symbol, off 4%, down $8. Toyota Motor, you would expect that with the Nikkei being down about 10% last night, off of its high out there, 7% from the close of the prior session. Toyota Motor down $6 right now. Now Biogen, BIIB off $5.55. Netflix off $5, and Green Mountain Coffee Roasters getting a little roasted this morning, down $4. So what do we know now? We're going to go back to the S&P 500. So what do we know that we've covered so far? On the EKG, the intraday chart, on the 30-minute chart, we should be expecting a bounce here. We should be expecting a bounce to work off that oversold condition. And that's what we expect. And if we don't get that, tells you the patient is really in trouble out there. So that should be the expected. There's enough divergence out here. There were enough bullish candles to say that the lows that came in at 5 o'clock this morning should be defended out here, and we should see a bounce. Does that mean that the selling is over with? No. It just means the EKG means it's got to work off that oversold condition. Now, what do we know about the daily chart? 1650 is a key number of support for this bull market to continue and hold. Now, when I say the bull market, I'm just looking at the daily chart out here. Actually pulling back to the dead cat area to the 1550 level to our 1555 to 0.382 level would be nothing. That would be a normal move. If you're in a trade, you should be expecting that. In fact, you should be expecting a pullback to sweet 618. That would take you down to 1474. Now, what's really key about these seasonal cycles, these 6-month seasonal cycles, at least the unfavorable one, is where is the 200-period EMA on April the 29th out here? On April 29th, April 30th, I should say, on April 30th, happened to be at 1470. Now, it's at 1470 on April the 30th. The 0.618 retracement, which is what we should expect, that is normal on any move out here, is 1474. Where is it that you would think during this unfavorable time period the S&P 500 will likely trade to, at least? That's right. It'll likely trade to at least 1475 out here. That's where she's headed sometime between now and the end of October during this unfavorable season out here. That should be expected. That in this bull run should be not a big deal. Now, it depends on your time frame. It depends on when you got into the market. That could make it a big deal out here. Just as well, you don't have to play the market short. You don't have to get your shorts out and iron them. Maybe you want, in fact, we know that reports out there, big money, is on the sidelines. Stay on the sidelines until about 1475, or let's see what kind of how the market pulls back. Let's see what kind of volume comes down into those areas. See if the market gets into an oversold condition as it works its way down there. See if there's some type of bullish reversal candle. That's the daily. Now let's go take a look at the weekly here. The weekly doesn't end till tomorrow, but now what should you expect coming into tomorrow? Well, really the same kind of thing. What are the numbers to look at? We'll take a look at, again, coming back to November 16th. On the week of November 16th, what we had here on the weekly, we also had a key reversal week. Not just a key reversal day, but a key reversal candle session on a weekly basis. Well, what is it that is possible to set up this week? Well, I would say what we want to be watching for is we want to be watching to see if the S&P 500 spikes the low, gets below 1626.74, because if you get below 1626.74 and you still finish in the red, you've now had a key reversal session on the weekly chart as well, because certainly we're in an extended condition. On the weekly, you can see it's in the overbought territory. Not there yet, but what's the number I'd be writing down on a piece of paper here? I would put the number Stevie's son just gave you, 1626.74. You get a close below that, you would have a key reversal session on the weekly basis, just like we saw back at the November lows out there. Is that important? Yeah, I would say that's extremely important out here to be paying attention to. That sets up a move back down to where? Well, not just that 1550 level, but how if I pull this thing back all the way, take a look at those blue diagonal lines out here. What is that? That's right. That's the rising price channel on the weekly chart coming off of the lows in 2009 out here. And if we try to identify an approximate price point of the bottom of that price channel, that's going to get us back into that 1470-ish range out here. Maybe it's 1490. Maybe we get a spike below it as we did back in November 16th out here. But expect that that's really where, just from a normal charting standpoint, a normal technical analysis standpoint, that's what the S&P 500 wants to do over the weekly time frame. Does it all have to happen today, tomorrow, the next day? Of course not. Don't expect that to happen. Do not expect that to happen in a market where the bulls along the ride here have been benefited by buying the dips out here. This is not just going to be a one-way escalator on the way down out here, or elevator on the way down. So we know what to be looking for on the weekly time frame. And pulling back into the bottom of that rising price channel, is that a big deal? Well, it's not a big deal if you were in the market at November 16th and you were long. It's not a big deal if you were from June of 2012 or November of 2011. It all depends on your time frames out here. Depends on your investment strategies. Now, finally, let's go over and let's take a look at the monthly chart out here for the S&P 500. The S&P 500, what we do know is that the S&P 500 broke out above that, what we'll call that triple top area. That was the high out here from the swing point candle, 1576.09. You heard us talk about that for what seems like about forever. So coming back into that 1550, getting back into the bottom of the range, is that a good thing? Well, no, it's never a good thing to get back inside the bottom of the range out there, because that always sets up a potential failure to the top. But it's not just the S&P 500 that we have to gauge the entire market off of. But if it gets below that level, that is 1576.09, it does set up something to be careful about. Now, the real carefulness on the monthly chart, you can see that red diagonal lines out here. That's the rising price channel coming off of the lows back in 2009. And we can see that area was pierced just slightly the month here of September 2011. Then you had that nice bullish engulfing candle the month of October of 2011. So we should still expect, if, in fact, we see on the monthly chart, we get below 1576, we get below 1550, a test of what? A test of that rising price channel at a minimum out here. Do I believe that the markets are going to move higher? I do. The divergences that we had back at the highs in 2007, back at the highs here in 2000, don't exist at the present time. And I believe they do need to exist. What does that say? What does that set up? That sets up on the longer-term basis that the S&P 500 really does want to travel up to 2350 over the course of the next several years out here. But right now, we're in that 6-month seasonal cycle. So, don't think about sell in May. It's really dealing with a 6-month cycle, not on a specific date out here. So that is the overview. That's my overview on the 4 different time frames here in the ES Mini. If we go back and we check in on the EKG, let me just switch over to a different tab here, a different set of charts that I've got. Let's go just check in on the EKG of the market. That's going to be that 30-minute futures contract. Let's see what we've got here. You can see the bulls certainly defending their low position out here. This is a Morningstar candle, by the way, folks. This 3-candle session out here, which took place between 4:30, the 5 a.m., and the 5:30 session out here. So you got a nice Morningstar. We know where the bulls, maybe that's Uncle Ben Bernanke, maybe it's Super Mario out there. We know where they're hanging out. That's going to be the level of 1632.75. You get a break below that, well, you can forget about the bulls trying to get back up to that rising price channel anytime soon. It'll head, well, as far as where lower goes, lower's going to take in about 1626. 1626.75 happens to be the lunar phase called apogee. That's where the moon during this cycle was the furthest point from us. Here's another number. You get below 1626.75 on the intraday on that 30-minute chart, on any chart out here, that really screams that it wants lower price. We got perigee coming in over the weekend here. I believe it's on Sunday when that takes place, and we also have a full moon that is coming in as well. Full moon or new moon? Geez, I can't. Maybe it's a new moon that is coming in. And an eclipse. So we've got quite a weekend out here with regard to the skies. But right now on the EKG, he hasn't given it up here yet. As far as bearish candles, well, you had this little shooting star right up here that came in at 7:30 this morning. So at this stage, EKG still says, yeah, it wants to bounce a bit. Now, let's go over and let's go take a look at, we want to spend a little time in Japan. And let's do that by taking a look at what did the actual Nikkei do here last night, because really that was down not just like large, like huge out here. So we'll take a look at the Nikkei 225 out here, and it was actually down 1,459 points. So it's the way that I take a look at it, from high to low out there, and it did close at its session low. So the Nikkei, what will be reported out here, what has been reported, is the mere fact that it closed down 7.3%. It really was, in one session, a 9% decline out here. Got up, as you can see, it actually it did gap up over the prior close from the prior session, where it opened. The Nikkei last night was at 14,483. Got up to a high of 15,942.60 out there. And then, market called from Boston yesterday talking about, fast markets. Will they take back a number of days quickly? And that's the problem. You want to have shorts inside the market. In fact, Uncle Ben absolutely wants to have shorts in the market because it's natural places where you will have buyers. Because what shorts will do is they'll go ahead and take some of their shorts off, right? They'll go ahead and they'll cover. They'll go ahead and they'll take some profits. When you have a market where you've scared all the shorts out of the market, that is a bad situation out here. In the case of the Nikkei, who was short this little rocket ship? Well, not too many people. And when you take a look at it, take a look at what's going on here, the Nikkei took back 9%. 9% in one day. There wasn't a flash crash or anything. 9%. And what it did was it came all the way back to the highs from May 8th. We're at May 23rd. So that's how you take back a number of sessions, and it was with massive volume. Unfortunately, on my chart system here right now, I don't have the volume, but what I do know, because I checked it out, it was massive volume to the downside. Now, what it also means is that the Nikkei will be back up there, because you do have a high volume high out here. It did make a higher high, just like our SPYs and our Qs and our IWM and our diamonds did. It's why on the longer-term picture, I do also believe that we'll go back up to those highs out there, just like the Nikkei will. But the Nikkei, it's just a normal pullback on the Nikkei, takes you to 13,145. That's a dead cat bounce. 11,416. If it can get down there, folks, we want to be all over the Nikkei. There's a couple different ETFs out there. We'll just have to play this thing one moment at a time out here. If I take the Nikkei and we go back to a monthly chart out here and take a look at the Nikkei, there we go. And we take a look at the Nikkei. Now what you can also see here, when price got up to the high yesterday, last night, this is why you want to make sure that you use a Fibonacci ruler. It always is the reason why you want to step back in time. When you want to step back in time, I was trying to think what was where that song came from. what was that Michael J. Fox movie out there? In any event, if we step back in time, we go to the monthly chart out here. The Nikkei, you would take the July 2000, Back to the Future, that's right. We would take, thank you, Al, you would take July 31st, 2007, that high, 17,248.89, down to the low inside the Nikkei. That came in October 31st, 2008. The exact 0.786, and you know we're not about exactness around here. We just want to be extraordinary, because you are extraordinary out there. 15,876.99. We'll call it 15,877. What was the high yesterday? 15,942. 942. 15,942 versus 15,877. That is amazing. What else is amazing here is a month ago, or whatever time period, we talk about these consolidation patterns because they're key. Take a look at these two yellow boxes here in the Nikkei, because you see, folks, this works on all time frames. This works on all charts. It doesn't matter what country. You can trade 24 hours a day if you want, and you can look for these same patterns. The Nikkei here, you got that big downdraft candle, big bar on October 31st. The high of that level was 11,456. The low was at 69.94. Take a look at the Nikkei. It was consolidating from October of 2008 until it finally broke out on February 28th, 2013. And when you break a consolidation, what is your move going to be? That's right. Your move is going to be equal to or greater than the consolidation in which you just came from when you broke out. If you break out to the bottom, it's going to be the same way. In this case here, take a look at those two boxes and take a look at where the Nikkei actually traveled up to as well. Not last night, but the day before. It completed that consolidation move. So it's completed that consolidation move. It should now pull back. Where could it actually pull back to? Well, it never really tested the consolidation that it broke out of. That could actually pull all the way back down here. I'm not saying it's going to, but if we do take a look at retracement levels on the monthly, let's just now go do that, and let's take a look at it. And you can see the 0.382 is 12,524. But coming back and actually testing the top of that consolidation, 11,456, it's not unachievable. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, we've got the Dow trading down. Give me a second here. I just had 116 points. S&P off 17. And, folks, the month of May is coming to a close here pretty quick. And if you haven't had a chance to sign up for our Tiger Dollar promotion, you absolutely want to do that. You want to take advantage of that. If you are a subscriber to any services at TFNN, make sure you get over there. And if you were sitting on the fence trying to figure out, should I check out that art of the chart software? Well, you should. I can tell you the answer to that is yes. Or maybe, do I want to check out Steve's newsletter service and all the education? There's about 40 hours worth of education videos that are in there. If you're a visual learner, which most people are, you've got access to that. What you want to do is go to the homepage at TFNN.com. You'll take advantage of getting 20% bonus on any investment you make in yourself in Tiger Dollars out there. In addition to that, for between $500 and $9.99, you'll get a 5% donation made on your behalf to the one fund up in Boston. Anything over $1,000, you will have a 10% donation, tax deductible on your behalf. So get over there. And I did mention the art of the charts. If you are looking for a charting software tool, and it's not just really a charting software tool. If time is important to you and you would like to be able to have scans automatically done for you that identify Gartley patterns, butterfly patterns, then this is the software package for you. If you're a person who doesn't completely yet grasp swing points and what they are and testing those out, well, then you should get that. If you would like to understand A to B equals CD and see those patterns that are set up, then this software is all for you. If you're looking for an entry point on a stock that you'd like, and you'd like to understand where a confluence is and have that automatically done for you, well, then this would be the software package for you. So hopefully you're getting the idea. Go to the homepage at TFNN.com. David White has got a number of great videos over there that'll teach you even more about the software. So go ahead and do yourself a favor and do that. Now, we were over in Japan, one of my favorite countries, I must admit, for a lot of reasons. But one of them certainly is the sake over there and that good old fresh fish, good fish over there. In any event, let's go take a look at the yen out here, the U.S. dollar, Japanese yen, and it is nice that the yen has weakened up. It just means that the price of sake is a little bit less expensive here in the United States. Now, as we're taking a look at the U.S. dollar, Japanese yen on the monthly chart, we're looking at that downtrend channel going all the way back to the highs here in 1998, I should say. Somehow that has acted as a repellent area. It's also where the .382 retracement was. So we had a little intersection. I mean, an exact intersection if you take a look at that line. Now, these lines were drawn out here a long time ago. The .382 level, the retracement off of the highs from 1998 to the lows here in the 2012, 2011 time frame. 103.09. We know that that area has acted as resistance thus far. That is a monthly chart. That's what has stopped it. If we go down, we take a look at a weekly chart out here of the U.S. dollar, Japanese yen. You can see here it got up to the midpoint level of its primary trading range. As you see, it's not just equities, it's not just indices, it's also currencies that have these primary trading ranges. And in the case of the U.S. dollar, Japanese yen, it's now traded back inside the lower portion. It should head down to about that 100 level again. That happened to be a primary trading range boundary line inside the U.S. dollar, Japanese yen. So moving back to that level, that would be just simply normal. Maybe we're going to get a much deeper retracement out here. One could only help if we take a look at the retracement levels coming off of the lows here. That little hammer candle on the weekly basis, September 14th, 2012, all the way up to the high that has been put in here during this week. The dead cat bounce would take you down into the 93.56 level, 0.618. 87.28, 93.56. Most certainly that would be achievable. Oh, man, time does fly. Well, folks, stay tuned. And always remember, folks, always remember, you have an amazing power within yourself. That power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. We'll see you in a few, or see you tomorrow morning.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.